we are ready for our next finalist, Mbarak, who's going to be presenting Quanta Services. Mbarak, are you ready to go?
Yeah, I'm ready.
All right, so bring your energy and I'm going to exit so you can start now.
Okay, hello, good evening, everyone. So today I'm going to be pitching a stock that's maybe probably isn't usually in the headlines, Quanta Services. So Quanta is a leading infrastructure contractor that builds and maintains the networks that move electricity from where it's generated to where it's needed. They're in a 300 billion market, so revenue is mainly driven by utility capex, and they are essentially the leader in the contractor space. So my thesis is really has two narratives. So the first narrative is in AI data centers. So data centers consume electricity at a scale of small cities, and power availability has now become the primary constraint. So AI expansion is really on availability of power and not chips anymore. So a lot of data suggests that there needs to be roughly at least 720 billion grid investment, according to Goldman Sachs, and utilities are already responding. So according to Edison Electric Institute, capex is expected to exceed at least 1.1 trillion between the next 5 years. And 60% of it is directly towards the transmission distribution, which is what Quanta exactly builds. So demand also on the ground is visible because data centers of space in North America is basically full. Vacancy is at 2%, I believe. So hyperscalers are already securing capacity years in advance. So it's like pre-booking an entire hotel before tourist season because it'll be just sold out. And the thing is analysts are still treating the data center, uh, aren't really treating the data center demand in their models, at least from what I'm seeing, because over the last four earnings call, they haven't really pressed Quanta on how big the market is. Most of their questions have been either towards renewables or asking about execution rather than market size. Meanwhile, management is describing the demand as exponential and is already investing in to serve these data center customers through targeted acquisition. So the AI grid demand is visible in reality and strategy, but hasn't been fully priced in consensus forecasts. Now, my second narrative is on the renewable interconnection. Now, clean energy demand has grown over the past few years, so the challenge isn't building a renewable project, it's now really connecting them to the grid. So by 2023, the connection process became clogged because too many early stage speculative projects entered the queue, which kind of stretched the study timelines and slowed down the real projects from moving forward. But late of last year, the new report shows that active queue has started to shrink and weaker projects dropped out. So that's a good sign because the cleanup leaves behind more serious financeable projects, and Quanta doesn't really make approval decision and it doesn't really run the studies themselves. They only get paid when construction starts, and that only starts after these projects have started receiving their agreements, which are known as interconnection agreements. Now, according to the study, about 18% of the projects have already signed this IA. So there seems to be a good headway, and this is mainly the paper to dirt moment where the plans turn into construction work, which turn into backlog, then revenue for Quanta. And we're already seeing it in Quanta's backlog growth. They reported a 39 billion record growth over the last quarter. Now, for my forecast and valuation, I made a 10-year projection. I assumed revenue growth rate of about 20 to 25%, mainly through the first 2 years through the related grid work as it ramps up. And after that, I gradually slowed down the growth to 10% by the end of the 10th year as the cycle cools down and the business returns to normal. I also expect margins to expand to about 8% because Quanta can bundle more services into one contract. That means they can capture a bigger share of each project's budget. But then I also later on bring the margins back down to around 6 to 7% as competition catches up. For my terminal growth rate, I used a 3.5%. With that bring my enterprise value at about 98 billion. And something to note is that that's roughly 74% of the of the enterprise value comes from the terminal year. So this brings my intrinsic valuation to about $635 per share, which is a 35% upside relative to its 30-day average closing price. Lastly, moving on to the risks. So the key risks I see is the AI load growth coming in lower than expected. Interconnection progress may also take longer if projects move through IA agreements but still have hiccups with their budgeting, and mainly also competition. I don't think any company would just sit on the sidelines and watch Quanta take all the market share. For my valuation, I think the biggest swing factor is the terminal year, because 74% of my EV comes from the terminal year. So any swing in my longer term growth rate, especially in perpetuity, has a big effect in my valuation. So that's the end of my presentation. Thank you for listening.
Great. Okay, let's have some questions. The first question comes from Roman, and he says, "Hi, Mubarak. Is Quanta's future share price more correlated to global AI build-out or the increasing demand pressure for energy sources such as uranium?"
No. So it's more on the AI sort of like theme, not necessarily in the uranium. Now, maybe there are projects related to the renewables on uranium, but they're more towards the end of the value chain, where once these projects have been built out, they just connect them to the grid. So
Okay. And another question from me, you mentioned about 75% coming from the terminal value.
yeah.
How long is your discrete period? Is that from 2026 to 2029? You talked about your revenue forecast for that period, right?
Yeah. So my forecast is a decade-long projection. So it's from 2026 to 2035. So the in perpetuity is the year after that.
So, okay, it's even longer than I thought. So,
Yeah.
do you have any concern that so much value is coming from the terminal period? And maybe you could just explain, why that's happening.
Yeah. That's even when I was modeling it, it was a bit of a concern, and I knew this would potentially be an issue. But yeah, considering the cycle, because most of these projects takes a long time to come to fruition. So it takes about 5 to 7 years for most of them. So I couldn't really model a 3 or 5 year period. So I had to use a longer period. And I think beyond that, things will go back to normal as the way they are now. So I think the 3.5% growth rate is more suitable. Yeah, that's the only thing I can talk about really when it comes to
Okay.
that.
Yep. And another question just came in, which is, what single assumption in the report would most impair the target price if it proves too optimistic? Like, where is the risk?
So the risk is the main risk is, I would say, I would probably go with the AI slowdown.
Mm-hmm.
So if, let's say, these hyperscalers, maybe the Microsofts and whatever, they say we're going to have to slow down in investing in data centers because there's pushback maybe in those communities where they're building these data centers, because data centers could some of them cause air pollution, some of them cause noise pollution as well. Maybe the communities surrounding that could probably protest and say, no, we don't want this built in our area. They're not good for our local communities and such. I think that could be an issue, because then investment would be much lower than it is.
Okay.
Yeah.
And your cost of equity is, I believe, 9.71%.
Yes.
And would you say that that's just about right? Or do you think you're being conservative, or is that aggressive? Like, what do you think about that level?
I think it's more for this industry. I think it's more aggressive, because some of these companies in these industries are kind of they're not utilities, but they do have their own risks. So it is much more on the higher side of the risk.
And what type of company is competing, that are they competing against? What is competition like?
So competition is the same type of contractors. I think some of them are called Mastech, if I'm not mistaken, and there's also other private owned companies.
Hmm.
They do mainly the same line of work, but for compared to Quanta is they kind of bundle the services. So some of them, if they get the contracts, they also subcontract some of the work with the competition. But for Quanta, they do the whole work themselves, from engineering to procurement and everything in between.
Okay, great. Time's up. How does it feel to complete this?
It's been great, to be honest. Real experience, and I'll be honest, the maybe 3-page report, like condensing everything, is kind of the biggest issue, especially for a company that maybe needs a little bit of a backstory.
Yeah, that's a huge challenge.
Yes.
And but I think you did well, and so that's good. And so it was me that said it should be 3 pages. My original idea was 1 page for this competition.
Oh, okay. Yeah, that would have been a real tough,
Yeah,
to be
but
honest, to pitch a 1 page.
yeah, the other thing that I'd see that we're going to work on for the next round is that when students are presenting from around the world, right? So they need to present a little bit about the company and where it's from and all that, because maybe not everybody totally gets that. So we
Yeah,
got some improvements we're going to do, but I'm excited. I'm excited to get the results, and so the judges have been scoring your work as well as the others. So I'm going to leave this now and then go on to the final presentation. But I want to congratulate you for making it this far.
Well, thank you so much. It's a real pleasure, and shout out to you and everyone in the team. Actually, everyone has been very professional so far.
Wonderful, wonderful. Okay, talk soon.
Thank you.
Well, there you go. Another great presentation. Again, remember, these guys just started working on these things very, very recently. So congratulations to all of them. This is Mbarak. He's in the finalists in the Global Equity Valuation Competition. My name is Andrew Stotson. Why don't you join the competition and try it out? See how you fare. It's tough competition.